Hi, and welcome to the Stock Scores Market Minutes for March 12th, 2018. This week I want to talk about what is stock risk. It is important to differentiate between the risk of a stock, the risk of a market, and price volatility. They are two different things. Risk is how much you stand to lose if you are wrong. It depends upon your exit strategy and how big of a position you have in a stock. Volatility is how much a stock could move based on its historical movement. It's affected by the diversity of the business, the liquidity of the stock, and its relative earnings dependability. Stocks that are highly volatile don't have to be risky if you simply keep your position sizes small and operate a disciplined exit strategy. If you buy too much of a stock, then you stand to lose too much based on the size of your portfolio. So tailor your position sizes to the volatility of a stock so that you can keep consistent and disciplined risk management. All right, let's get into this week's market analysis. This, of course, is the hourly chart of the S&P 500. It was in what we call a pennant pattern, and it broke out of that pennant pattern on Friday. I didn't think it would. I actually thought we would get stuck at the top of the pennant, which was kind of right about there. But we, in fact, gapped up, paused for maybe 20 minutes to an hour at the top of that pennant, and then ultimately broke through and continued higher all day. So that's a good sign. It indicates that the buyers are back and that they remain optimistic. In the long-term chart, of course, we can see that that long-term upward trend line has held. We hit it a couple times, and now another time, bounced off of it. We're basically in this upward sloping channel. If you take out the little parabolic run higher, we've corrected back into the channel. We're actually now tickling through the top of the channel again. So my sense is we'll probably move up to the old highs and get stuck and maybe go sideways for a little while, build a little base, and we'll see what happens after that. Still, the long-term trend is bullish, and so we should remain bullish. Moving along to the Russell 2000, which is the US small cap market, and it is also in an upward sloping channel. Didn't draw that ideally, but you get the idea. And there's a little bit of upside till we hit the top of the channel, so I remain a bull for US small caps, which have lagged the large caps, but are starting to show some strength again after taking a month off. Moving along to the Canadian market, and it's really lagging the US market. It has not broken out of its sideways trading pattern. It didn't show the same kind of gains, and of course there's some issues with tariffs against Canada and the potential for NAFTA renegotiation, that sort of thing. That seems to be weighing on the Canadian market. And of course, commodity prices haven't done much lately, so this market is lagging. I give it a neutral rating. And moving along to the long-term chart for Canada, I've said for some time that this is a neutral chart because we are in a sideways trading pattern. The upward trend line was broken right there. And so we are now destined to move in this sideways range for a little while until we can build some optimism and break out, or build some pessimism and break down. I would consider this a neutral market. On the TSX Venture, which of course is the microcap stocks in Canada, it's quieted down. We had that big run on cannabis stocks, and we're building some optimism again as some of those stocks are bouncing back. But until we can break this downward trend line, I wouldn't get too optimistic. We're getting close to that point. We're at the pointy tip of the triangle, and so if we can break to the upside, positive things. If we break to the downside, be a little bit concerned. Keep an eye on this chart as an indication of where those microcap stocks are going. Of course, the Treasury bond market is an important one. It tells us where interest rates are headed, and we have had some weakness of late, but we are at strong support. We've talked about that for a number of weeks, and until we break down through that support, I wouldn't be too worried about it, but this is an important chart to watch because if we get a breakdown through that support level, we will probably get some weakness in the US stock market. So keep an eye on this. For now, more likely to bounce off of support. That's what tends to happen. When markets fall into support, they tend to bounce off of them. And the US dollar, still in that downward trend. We've talked about this many weeks now, and we're starting to move back up toward the trend line after running away from it, but we need to break the trend line. Until we break the trend line, be a bear on the US dollar. Gold benefits from that bearish US dollar chart. You can see that we've got optimism building on the chart of gold. We need to break out before I get too excited about it, but the optimism is a positive sign. I wouldn't do anything with gold yet, but watch for that breakout as a sign that it's time to buy gold and gold stocks again. And on to the oil market, which also benefits from a weak US dollar, and it's holding its upward trend line, but it is in the same pennant pattern that the US stock market has been in. The US stock market has broken out of it. The oil market has not. So what you watch for is, will we get a breakout through that downward sloping trend line? That would be bullish. Or do we break down through the upward trend line? That would be bearish. So keep an eye out for that. We're in the pointy tip of the pattern. And so in the next week, I expect we'll get a break one way or the other. And all you got to do is watch for the direction of the break to tell you the likely move that is coming in oil. Well, with the rally in the US stock market on Friday, we had a breakdown in fear. There's the pennant pattern on the fear chart, the VXX. We broke down, and therefore I expect the fear chart, VXX, to move lower in the near term. So my ratings then: bullish on US stocks long term, neutral short term. Canadian stocks neutral on both time frames. The same can be said for gold and oil. The US stock market has broken out of its pennant pattern to the upside with some surprising strength on Friday, breaking right out of that pennant pattern. This sets up for continued strength and a likely retest of the highs. Canadian stocks are lagging. I would say you got to be pretty picky with Canadian stocks right now. Watch for a pattern break on oil, up out of the pattern or down, to predict its next move. Gold is holding in that optimistic pattern, and fear is falling. So this week for the trade of the week, which I just screwed up. Let me bring this back up here. This week for the trade of the week, I wanted to show you something that I posted on Twitter, which was the trades for one of my trading days, day trading days, I think last week or the week prior. And I want to actually focus on the loser on this list. So every stock on this list I bought using the same strategy. And what I want to drive home is that this particular trade on JDST fit the rules just like the other trades fit the rules. It had an action candle on the open. I'll try to circle that for you right there. So it had an action candle breaking from the right kind of pattern, all of the things that I look for, all of the things that I look for in every other stock on that list. This one, however, did not work. And so it would be tempting then to start thinking, well, I had a loser on this trade. Should I try to modify my rules? And what I want to emphasize is that when you're an algorithmic trader, when you approach the market using data, what you have to recognize is that it's not going to work every time. And I expect to lose 30, 40, even 50% of the time. But what's important is that I don't take big losses when I am wrong. So in this particular case, I got stopped out on this trade right in there. And if I hadn't been stopped out, I would have taken a much bigger loss. But I didn't take a big loss because I had the discipline to manage the risk effectively and get out of the trade when it wasn't working. Should I alter my buying rules to not buy this kind of a setup in the future? Well, no, because if you looked at that list, there was lots of profitable trades on that list, and they all used the same strategy. Sometimes you do everything right and you're going to take a loss, and when that happens, you have to have the discipline to get out and move on. Well, that has been the Stock Scores Market Minutes for March 12th, 2018. Have a great week in the market and trade well.